What's going on, traders? Welcome to the SPACs attack. Yes, you made it. We're going to have SEAH coming on up. Yes, in just about 15 minutes, we'll get into that interview. We're going to do some headlines first. This is when we go ahead and tell you all the major headlines that are out there on the SPAC industry. So stay tuned and welcome to the SPACs attack. What's going on, traders? Welcome to the SPACs attack. Yes, you made it. We're having these numbers jump up. Let's go ahead and hit that like, hit the share button. Let everybody know, hey, we got a great interview today, guys. Don't miss out. Let everybody know it's coming on up. And if you guys like this and are interested in hearing from this company coming on up, I want to see some likes. I want to see some name mentions in the chat. So definitely shout out there. Let's see who's out there. Who's a bull out there? We'll hear it definitely. All right, let's go ahead and bring on my man, the brains to this show, Katje.
Mitch, I love that energy, but I'm looking at the chat and it looks like you're scaring some babies out there. So
scaring babies.
That comment from Dustin, the 7-month-old, getting a little startled.
Can't handle it.
That energy, Mitch. Yeah, let's go. We got an exciting show today. Mitch, if I recall, I believe our very first episode ever, SEAH was one of those tickers that we mentioned, Sports Entertainment Acquisition, a SPAC loaded with former executives from the NFL, the NHL. I mean, tons of sports experience. And we said, hey, they're probably going to grab, a sports media or a sports betting company. And we got that deal announcement not too long ago for Super Group, parent company of Betway. So super excited for this interview today to hear again more about sports betting.
Definitely. It's been on my radar, Chris. So I'm super excited that we are finally getting towards this interview. We've been talking about it since, I think, October. I mean, late October. So let's definitely get into that. But before then, we're going to get into our headlines like we always do. So definitely, like always, Chris, take us back to those headlines.
All right. Yeah. So we did have one deal announcement today. We've got a rumor and a handful of headlines out there. Want to get through these quick before we get into that interview. So up first, we have SKIN, former SPAC, Beauty Health, shares trading up, Goldman Sachs initiating coverage with a buy rating and a $31 price target. Keep an eye on this one. It's been listed, as a reopening play with its beauty segment. And getting that strong coverage today. We also have Latch, LTCH, a recent de-SPAC. Cantor Fitzgerald initiating coverage with an overweight rating, a price target of $19. So that's another one to watch. We have DCRB, Decarbonization Plus Acquisition Corp. Their partner, Hyzon Motors, announcing that they will supply hydrogen-powered trucks to a transportation company. Details were not disclosed, so we don't know who this partner is yet. But DCRB getting lots of news for Hyzon lately, so definitely on watch. Another one to keep on watch, we've been talking these space SPACs. We do have NSH. This is a satellite play. I think I mentioned it on the show yesterday. I saw that Queen Elizabeth, she visited the offices of Spire Global yesterday. That's the company merging with NSH. The royal family, sending out tweets to their millions of followers. So this company could be in the spotlight. They could also land some deals, the British government, so definitely keep an eye out on NSH here with that news. And then one of our big movers today. So FST shares up double digits. This is the company taking Tillman Fertitta's restaurant group public. They actually amended their deal. So they added additional restaurants to the deal. So now the valuation, $8.6 billion, up from $6.6 billion previously. So adding to the deal, Catch Hospitality Group, Galveston Island Historic Pleasure Pier, and Mastro's Restaurants. So again, adding additional restaurants, additional properties to the deal. Also, along with the terms changing, Tillman Fertitta will own 72% of the merged company. That's up from an original 60%. So that's something to definitely watch too, as Fertitta's going to have, a large portion of this company. The company expects revenue in the second quarter of this year, $920 million. Again, this could be a reopening play with the restaurants. They own the Landry's brand, which is well known. They also own Golden Nugget casinos in Las Vegas, Atlantic City, and Del Frisco's, Joe's Crab Shack, and then also a controlling stake in Golden Nugget Online Gaming. So that's definitely something to watch too. GNOG, went public via SPAC, and this SPAC group is going to own a good portion of that. So again, shares of FST up double digits. That is why. Yesterday, I mentioned on the show that we had the pricing of 4 new Chamath Palihapitiya biotech-themed SPACs, DNAA, DNAB, DNAC, and DNAD. None of those include warrants. They all offered $220 million, all 4 trading at 10.10 or above to close out yesterday. Also noting SoFi customers got an allocation of 5% of these IPOs. So if you're a SoFi customer, again, you were able to possibly get into these SPACs early. Not a big surprise that they do trade at a premium over the $10 mark, but definitely different than, months ago when we saw Chamath SPACs trading at huge premiums. So keep an eye out on these. They could get strong interest here. We had 3 mergers approved yesterday. ALUS, new ticker will be FREY. HOL, new ticker ASTR. APXT, new ticker AVPT. Some of our movers yesterday, we had GHVI up 13%. Matterport announcing a collaboration with Facebook. SRAC up 5% on that new valuation terms for Momentous. And then TVAC up marginally on that deal announcement yesterday. Our new rumor out there, we have DHCA, Bloomberg reporting that electric vehicle charging company FreeWire Technologies could be merging with DHC acquisition, could value the company at $1 billion. So they make chargers that include embedded batteries for energy storage, which avoids straining power grids. So a little bit different than some of the players out there. Says it can fully charge an EV battery in 20 to 30 minutes. Company previously raised $50 million, among the investors BP, British Petroleum. So this is one to watch out there. And then our deal today, this one was rumored not too long ago. We have ticker ISOS. This is ISIS Acquisition Corporation announcing a merger with Bowlero, the largest bowling center in the world by units. It values the company at $2.6 billion, includes a pipe that was oversubscribed, $450 million. Apollo Group, Soros Fund Management, and Wells Fargo among the investors. This is the SPAC led by 2 former World Wrestling Entertainment executives. So Bowlero has 321 centers in North America, 286 in the US, 7 in Mexico, 2 in Canada, and 26 additional centers under a letter of intent. Brands include Bullmore Lanes and Bowlero, and also AMF. The industry has over 3,500 independently owned bowling centers. So Bowlero's largest competitor, they're actually 8 times larger than them, with only 44 locations. So an addressable market size, $4.5 billion for U.S. bowling. They acquired the Professional Bowlers Association brand in 2019, which has a deal with Fox, 70 hours per year, 23 million viewers in 2020, which was its largest viewing audience ever. They also announced that they have media projects in the works with a development firm and Netflix, mentioned in that presentation. Also working on gaming. They have a partnership with Skills for mobile games. Sports betting mentioned in the presentation. They have a deal with Fox Bet, and they're also in talks with other companies. Also monetization of real estate. They purchased several bowling centers with land, and they also mentioned a possible REIT in the future, spinning off their real estate. So, a possible catalyst here. This could be a reopening play along with that. They were hurt by the pandemic. So a lot of their presentation discusses their trailing 12 months revenue, $742 million in February 2020. They see revenue hitting $373 million in 2021 and then rebounding to $758 million in 2022. Revenue to grow 7.9% annually from 2018 to 2023. And they do have positive EBITDA, $163 million in 2020 and $242 million estimate for 2022. Shares trading flat. Mitch, I don't know. This was an interesting one for me, bowling. We talk reopening plays. We talk post-pandemic. I think bowling alleys, maybe they see an increase in people trying to get out and bowl. And I don't know about you, but I wasn't watching, bowling events on TV. But it's interesting to hear that they actually had their strongest viewership ever in 2020 for the PBA. What do you think?
Dude, you're not working on your split game? Come on, bro. You got to be working on that. Come on. I thought you had that down pat.
I've never been a big bowler, but it sure is fun, to go hang out. And I think that's the big thing with this, right? Is like they can increase revenue by having, games there, having drinks, having food, all that. So high margin business and, a reopening play. So I kind of like this deal.
Yeah, definitely the revenue is going to have to increase than last year, right? I mean, at least that we know for sure. Now, one thing I would state is that, I have made one of those splits before one time in my life, and I'll tell you that was something else. So if you got, those kind of moments, those family moments, hey, who knows? Maybe families looking to have an experience this summer, go out to the bowling alleys. All right, let's go ahead. Let's get into our interview time where everyone's been waiting for. I already see the chat buzzing. It's getting ready. Let's go ahead and do what we do best, guys, when we unlock SPACs. This is what we like to do here on SPACs Attack. Why? Because at the end of the day, you guys need to get information. You guys need to be hearing from these companies. So this is what we do best. So let's unlock some SPACs.
All right. Yeah. A lot of excited fans out there, joining us on the show today. We're going to talk SEAH. So we have Eric Grubman, the chairman and CFO of Sports Entertainment Acquisition, and Neal Menashe, the CEO of Super Group Global. Welcome to the show, gentlemen.
Thanks for having us.
Thanks,
welcome
guys.
to the show. Welcome.
Mitch, how are you?
Super excited. As you guys heard, working on that little bowling game alley. But hey, when's the last time you guys went bowling? I'm sure it wasn't last year, but who knows? Maybe this year you guys check it out.
Maybe. But listen, I just heard you're one split better than me, so I'm competitive. I might have to get in there. I haven't been in there in probably 20 or 30 years, but maybe this is the opportunity.
It's all about the angles, right? I mean, I'm the sports guy. I play so many sports. You just got to get that right angle. But I'm going to let Chris.
I was always a force guy. Throw it as hard as you can to get it down.
That's what I did. That's what I do. You just chuck it down there. Knock them pins over. No angles, nothing like that. Just throw it. Yeah.
That's probably why we don't take betting on it.
Yeah, there you go. No, yeah. I don't think I'd be betting on myself.
He's lining us up.
Well, the perfect game bets. I already see them coming out. But I'm going to let Chris ask some questions, and I'll be back with some of my own because you guys know I like to do a little gambling myself.
You guys talk a lot of great companies out there, SPACs. And, when I tick through the list, I see my old friends and colleagues and doing great things. Anthony Noto at SoFi and my friend Pierre Lepere at Decarbonization and Tillman Fertitta. So we're just, we're happy to be here talking because you got great companies out there you talk about.
Awesome. Yeah. So let's dive into some questions here. Eric, I'm going to start with you. A lot of people out here, they're excited about this SPAC. They've known about your experience, your history before. But for any viewers out there who may not know about some of your past companies, and the NFL, job that you had, can you just break down some of that background experience for us?
Sure. I'll give you the second version. I was started at the Naval Academy. I went into Marines. I was a nuclear engineer and a general officer on the fast attack called Boston. That's the old Hunt for Red October days. Then I left, went back to school. I went to Goldman Sachs in the merger department. Ended up running the energy business in banking and sports, which I started up at Goldman after getting assigned the project to sell a very weak, struggling franchise, the New England Patriots. And we sold that to the Kraft family, and history's been made from it. I left Goldman as a partner. I went to Constellation Energy Group as co-president, had some challenges and restructured that as Enron and a bunch of other companies blew up, and then tried to buy a bankrupt shipyard, lost, took a phone call from Paul Tagliabue, and for the next 14 years I was there. And then I really got an opportunity to have some fun with Neal Menashe and Richard Hassan and their colleagues at Super Group. We launched a SPAC last year, and they gave us a call after we were public, and we sat down and did a deal. So that's my career in short. It's been a lot of fun, pretty wild.
Perfect. And then Neal, let's turn over to you. Give us your background, and then we'll start getting into Super Group here.
Okay, so I'm an accountant I do my accountancy articles at Arthur Andersen in South Africa, Johannesburg. And then I came to London in about 1998. And then obviously that's when the online world was starting. And in about 2001, we started providing services to the online market. And I've probably done every job in this business that we've created over the last two decades. And I suppose about me, my big thing is we've got to have fun as we've grown this business. We obsess about the data, obsess about the numbers, and as a team, create more as a team than we would do individually.
Perfect. So Neal, one of the questions we love asking here on SPACs Attack, I heard Eric mention that maybe he got a phone call from you, but why a SPAC deal to bring Super Group public? And, was a traditional IPO a consideration prior to this?
Okay, so we've been a private company for the last 2 decades. So not a lot of people didn't know us. And then what happened there was a colleague who did some work for us, and he knew Eric, and he said, I really believe that you guys together would make a perfect match. And when we met Eric and John on the very first meeting, we all connected, and it came that we need to have access to these markets, and they were the perfect partners. So it was almost like you meet the right people, the right time, everything clicked, and from then is why we're sitting here today.
Awesome. And then Eric, SEAH launched as a SPAC. You had your choice, probably from, what I imagine to be hundreds and hundreds of companies. What were the key points, that really helped you center in on Super Group, to make this be the decision for this particular SPAC?
Well, there are a couple of key factors. Everybody's money in trust is exactly the same. If you got $100 million in trust or $400 million in trust, whatever it is, my money is exactly the same as your money. We only wanted to try to make an investment and merge with a company where we had the opportunity to add value beyond just the money in, either as directors or as advisors or whatever it may be. And so that was one very, very important thing. The second was we wanted to like the management team, because in making this investment and being the stewards of investor money, we wanted to do something for the long term. And so we wanted to make sure that the people who were running the company and were important in making future decisions were people that we thought were high quality and people that we thought we could trust and do business with. And then last but not least, we wanted to combine with and merge into and make an investment in a company where we understood the business model and we thought that the business model would be evident to our fellow investors. That is not to say that we think badly of other SPACs that are doing deals that are much more capital oriented. It's just to say that's not what we wanted. We wanted to do a real company with real data, with real growth, and we wanted a killer management team. So we got the call, we met these guys, and became apparent to us we had those things, and they thought we could add value, and the areas they wanted us to plug and play, we were open-minded to doing, and so it's a good match. Now, I will say that Neal all along says it was a match. I always have all along thought it was my reading glasses that attracted him the most.
Yeah, exactly. And I'll just add there that,
it was a good match. If you can't sit on 25 Zoom calls with someone and still like and respect their opinion, it's an issue. It used to be you could do that in 3 meetings in a room, but now you've got to, it's a different world. And so in that world, we didn't take our first impression again and again and again. And I know 100% the advisor that advised Super Group is somebody that I'm close to, and he said the same thing. Yeah, they like you, but they're not sure yet. So it was a courtship, if you will. We liked each other from the beginning, but then we tested it, and some tough stuff in the negotiation came, and things could have broken, and they didn't, and those were good signs.
Awesome. So Neal, Super Group, we have Betway for online sports betting, also Spin for online casino, licensed in 23 jurisdictions, Europe, America, Africa. Give us the breakdown. What is Super Group all about here?
Okay. So, for me, I'm being biased here, but I think it's a very special company, right? We've built it. It's online only, and it's the holding company for leading online worldwide brands. And Betway, as you said, which is our flagship one brand across the world. And then you've got Spin, which is numerous casino brands. And what we do is it's all about taking markets. Every country is a market, and the US is no different. Every state's a market, and it's this global reach. So we go with Betway being sports across the world in open as many markets as we can, and then we go with these casino brands. So for us, it's all about the customer entertainment. It's understanding the customers. It's getting your product right in each market, and it's understanding sports betting. It's all about this. It's this first-class entertainment, exactly what it says on the screen. That's what we do. But we do this with over 3,500 people dedicated across the world, in countries, in regions. This is a truly global business, and it's online only. So what that means is we don't have bricks and mortar. That's not what we do. We only do online. We don't own betting shops, none of that. It's all online.
Awesome. So one of the things we have an international audience here, but I'm sure the majority are US based. So one of the things that really stood out to me in the presentation, is the push in the US. So has the rights to 10 US states and looking to add more. We'll start with you, Eric. How important is, US expansion a part of the SPAC merger and for Super Group? And then Neal, I'll let you follow up after that.
Well, I think that the U.S. expansion is one important piece among a number of important pieces. It is not the only one, and the company's lifeblood and health doesn't depend on it. But any company that wants to be first class in this industry segment and wants to appeal to fans in the world needs to have a presence of one form or another around the world. Betway is already here, even without being fully active in there, because they have U.S. sponsorships that are marketed around the world. It's just another piece of the puzzle to be able to provide the end platform here in the United States. The second that's important about it is this is an industry group that is undergoing change and opportunity that is very strategic. And so the important topics we talked about, and you asked Neal the question, why a SPAC, why go public? You add to that, well, why in the United States? It's because if you're going to play in that game, big game of the strategic moves. If you want to play in that, it doesn't mean they're going to buy or sell, but it means they want to be able to be at the dance. And to do that, it's very important to have a public listing. In order to go into new countries where no one has heard your name, it's important to have a public listing. And so then add to that, where do you want that public listing? The United States are the most vibrant and deep capital markets in the world. And so being public in the United States was the top of the company's list. So that's why the United States is important. It's important because of the fans. It's important because it's around the world. It's because the worldwide sports that Betway is so prominent in outside the States being consumed here in the United States. And it's important for the capital markets. And it's important because the United States has multiple big markets opening up. The United States is not one market. It's, I don't know how many are already legal, but probably headed to 5. And so those collect up to a feature for the company.
Perfect. And Neal, on the U.S. expansion here and the deals in the U.S.
Yeah. So basically, Super Group, we acquired DGC, Digital Gaming Corporation, obviously subject to regulatory approval, and they've got the rights to the Betway brand, and they've done all these market access. Because as you know, in America, in each state, you have to do market access via a land-based in most of them. So we've got teams there working together to be able to deliver on this. And again, each of these states is an individual market. You got to get your product right. You've got to get all the marketing right. So with us, what we do, it's no different to if we opened in Africa, if we opened in Europe. Each country, we've got teams are dedicated to it. And we find it for us, which is probably the interesting part, is when we sponsor the NBA, we sponsor the NHL, the all of these kind of things. What happens there is it's for the global audience. So as you add more markets, you already are, it's global marketing, but then you can do localized targeting. So this business is all about global, the brand, seeing it, and we do lots of sports. We've been doing, what people don't know, we've been doing esports for years and years there. We do tennis, we do cricket. We've got audiences all over the world. And for us, it's appealing to that. It's giving them a place of entertainment to come. And then these businesses are all about how much it costs to acquire the player and your retention, how much you keep in the ecosystem. And that's what we've been doing. And so the world is effectively our target, which the US is a very important part. But it's not the only part. And I think that's where we kind of differentiate ourselves. Plus, we one brand across the world for sports. But casino, we do multiple brands.
Perfect. So, since this deal was announced, we also got a partnership with the NHL announced in May, kind of coinciding with the Stanley Cup playoffs. Can you guys both speak on what this NHL partnership means? And Eric, I'm curious, if this was something that was talked about in the SPAC merger discussions, or if this just all came about, after the fact.
Well, that's a very good question, and the way you phrased it is perfect, because the key to Super Group is that they have lots of things going on in lots of places around the world. And they are rich in opportunity. They've had a lot of capital. They haven't had a public listing, but that's coming. And so they got the opportunity to pick from among the best opportunities. The NHL deal was one of many that is in various stages of development inside Super Group. And so we didn't spend a tremendous amount of time, and we don't spend a tremendous amount of time now that we're so closely linked, talking about doing X, Y, to get in front of ABC company because of the competition. That's not the way Neal Menashe thinks. I don't want to speak for Neal, but my observation is what Neal thinks is, what is my opportunity set? Which one is best for return? Does that overlap with the one that's best for growth? Does that overlap with the one that's best for development? And so he comes up with these concentric circles and makes these Venn diagrams in his mind because he can keep all this stuff straight. And he picks the best for the company. And those words, what's best for the company, I have heard those dozens of times since we met Neal and Richard and the rest of the team. And when tough things came up, whether it was titles or this or that, they always said, well, what's best for the company? We're going to do what's best for the company. And I think that's why, I shouldn't say I think, I know that's why it appealed to me and my partners and those of our investors who have a voice in this before we did the deal. It was really oriented around what is a good investment for the long term and having people who think what is best for the company and its shareholders. So that's a long-winded way of saying, yeah, the NHL deal was kind of around, but it wasn't the only thing that was around. And our SPAC agreement certainly did not depend on it or anything individually like it.
Yes, and I would just add that when you look at the world, you look at the world audience of NBA, NHL, football, soccer, and tennis and esports. So we've got a branding and marketing team that looks at that, and then they work out which are the best returns for the brand, how they look at it. And then you go into those individual markets and countries, and you then do the localized marketing, the digital. It's all about retaining, as I said, acquiring, retaining these customers. But when you do this on scale, and what I like to say, this isn't me. This is our amazing 3,500 people across the globe. And it's all about the managers and the managers above them and the CEOs in all the businesses that have to eat and sleep and understand each of these markets, because it's the returns are based on the data and mining that data in those markets and tweaking and little tweaks on big databases. You know, we had 2.5 million active users using our system in March. You know, this is a vast number of people, and it's increasing. And you know, and what everyone also forgets is the global, they say the global gaming market by 2025 will be $100 billion. Of that, the US will make up 10 to 15 billion. There's still 85 billion. You know, we now are on track to do just over $1.5 billion of net gaming revenue. We've got a long way to go. There's enough market here. And with the shift of everyone coming online and everything on the mobile, and it's how quickly you can do it. It's how the product reacts in these markets. And 26 languages, it's all about offering the right offers at the right time in the right markets. And we do that obviously for sports and then for this casino offering. And we do, yeah.
Awesome. And just go ahead, Eric.
Chris, connected to that dot when you were talking about the bowling company. And I think it was you who said you either forecasted or it was in their forecast that maybe they're going to add gaming. There are thousands of those things going on in America and all over the planet, where people are connecting some competitive fun thing to do to gaming of some sort. Where's that gaming going to be conducted? 99% of it is going to be conducted online. And of that 99%, to the extent it has anything to do with sports or other sports-related forms of entertainment, it's going to be within the purview of a company like Super Group, which is 100% online and global. So you just let your mind wander that I shouldn't say that's where it's going, that's where it is. People love to put down a small wager on something they're either watching or passionate about, and it's fun, and it adds to it. And so why does everybody in America, even though they may not follow college basketball, participate in the March Madness office pool? Because it creates those social bonds and that fun. And so that's a business opportunity for Neal, Menashe, and crew at Super Group.
And now Eric and John as well.
Awesome. Eric,
I'm not making the market with Mitch on whether I beat him on the split. I'm just not doing it.
Eric, I want to follow up on that a little. I had a later on question here. I saw in an interview you did recently, you talked about how Super Group is not just a gaming company, they're an entertainment company. Can you just provide, some color on maybe what that could mean in terms of, some ideas you have for Super Group to grow in possibly some other segments here?
Well, I'm going to totally duck that question in giving a specific answer because we can't do that.
I had to ask, right? I had to try at least.
Yeah,
so.
But I am going to play the theme again because it's a really important theme. And so why I say that Super Group is an entertainment company and Super Group said that to us in the beginning, is because the reality of it is this, and this comes from your generation. When I watched my kids watch football with me, it was a different experience for them than when I watched football with my father, because there was already that second screen that they were dealing with, even, as recently as that, or as long ago as that. And so if something isn't interesting that you were watching, people are watching, were watching, will watch, they'll flip off. They're gone. Or they'll add a second thing, or they'll add a third thing. So if all it is the wager that my father might have done or my grandfather might have done, that's at the betting shop, that's a different activity, that's not Super Group. If it is fused to the social aspect, if it's fused to the fan passion, Super Group. And so when you think about it that way, not pure gaming, it's entertainment over a period of time, which could be 10 minutes, it could be 4 hours. When you think about that and your Super Group, well, you better be thinking about the rest of the things that people want along with that sport or along with that activity, whether it's a highlight or they want a second screen that's showing the highlight from the game across town, whatever it is. Or if it's not even in the same sport, but you want to see what happened when Serena Williams' leg got injured. You have to be thinking that way, and thinks that way, and many other people who are in the betting business are thinking that way. So that's why I think that's where it was going.
And also, I think with broadband, with the mobile penetration and that, what's effectively happened, you can do lots of markets in a sports event, and you can make lots of different bets along the way, which makes the game exciting and engaging. So there's all these things that you never will be able to do. You can share your bets. There's a whole host of things you can do. And again, it even makes sports that you didn't like, brings more viewership to those sports, because you start understanding the sport, you're understanding what's happening. And we can even do, in something that sounds crazy, this, but ball by ball betting in cricket. There's all these things you can do, and it's all about the speed of the data and how we can get it to the end user as quickly as possible.
Perfect. Neal, I asked Eric there about the entertainment company. I'm wondering if you can provide any color on what acquisitions may look like down the road. There was a slide in the presentation, discussing some M&A opportunities. I know you can't go into specifics, but any color, will that be within the sports betting segment? Will we see some new verticals? What's kind of the game plan here, if you can provide anything for us?
Listen, they can be businesses that are gaming businesses that fall under us. Targets in certain countries. There's technology plays. There's a host of stuff in the vertical. This business is made up of obviously acquiring the players. So there's all verticals there we can get into, and then it's about retention tools, and it's about adding new markets, new tech into those markets. So we've got a range, but because we've got a diversified portfolio of our own platforms and third-party platforms, etc., we know how to use and assess all these different systems. And I think that's what's key. We know what's working, and if it's not working, we have to change it. And that's how we've built the business. And again, and I keep saying this in all my stuff, this is a marathon, not a sprint. This is not who spends the most in the next 2 years is going to win the game. This game is a long game, and for us is we've got to strategically have all these different tools in all these different sets in our arsenal. But what we do have is we do have volume, we do have brands, sports betting brand. That's so when we market, we're marketing one brand. Now, casinos, online casinos is slightly different. You have a lot of genres of brands, but that's because customers enjoy different. They feel luckier at different genres of casinos. But sports betting is all about: are you getting a great service from that brand you are engaging with? And do they offer you all the different betting opportunities and stuff like that? So that's how. So for us, there's a host of opportunity, but we will look at that as we have with all our marketing campaigns. What doesn't make sense? Where does it strategically fit in? And then that's how we've done it, and that's how we continue to do it.
Perfect. One last question here from me before Mitch hops back on with a couple. Eric, and I'm not sure if you're able to answer this question. Asked by a friend of the show, Sean, and I'm seeing it in the chat several times. Obviously, with your past history with the NFL, people want to know, is Super Group or Betway going to get a partnership with the NFL? Will you have any pull there? What can you give us for those looking for, a NFL relationship here?
Well, shout out to Sean for the question, first of all. Second of all, I'll say this. There's no deal that's going to get done that's not good for the NFL, whomever they do a deal with. I'm confident there's no deal that's going to get done by Super Group, Betway, Spin that's not good for the company, based on who we are and who the management team is and who the shareholders are. Can those two things intersect? Yeah, of course they can intersect. Do we have a better chance than someone else to make them intersect? Well, we're not going to be the party that pays the highest price, today versus tomorrow. We might be the party that understands what the NFL or some other property wants just by virtue of how long John and I have spent around that property. So I don't want to create speculation about this property or that property or recent things. I'm just going to say I have good relationships with the National Football League. There are a lot of people still there who I know and respect. I'm confident if the win-win opportunity that we in the NFL would find it. But if there's not, I'm confident that the NFL is going to do well, and I'm confident that Super Group's going to go well. Now Sean is going to say, Grubman, he just gave a non-answer answer, but that's the reality. We know them, know us, we respect them. I'd like to think that they respect us. So if there's an opportunity for us to do something together, we're going to find it, and it'll be a win-win. And if there's not, we're both going to do fine by ourselves.
All right, I'm going to go ahead and jump in here with some questions of my own. Let's go ahead and let's talk a little bit about tech. We could take a look here and get a little bit more in depth of exactly what's in here. But I really like this next slide that was up on here on the 22nd page. Really what it talks about is kind of using AI to bring those bet recommendations and the custom messaging. That's really what I want to ask about. How do you guys accomplish this? Are you guys using your own proprietary technology, or you guys are using third party here? I always think the bet recommendations are very important because I take a look at these myself as I have myself some weekend fun. So let me know, what do you use, Neal?
So firstly, very importantly, all the data sits in our systems, and then in certain markets we'll have our own tech, own back office, PAMs, etc. And in other markets we use third parties, but all the customer journeys we control, everything we control. So it's all about when you're building a global business, you can't take your software into every single market at the same time. It's just physically impossible. So what we do is we use other people's, but on top of it is our layer that we've always used. So when we, all the marketing tools, all the bet recommendations it's our systems have to be pooling the data. And then also, if you're giving bonuses, you have to give bonuses in real time and understand when to give those bonuses and what's the best time to do it. And then all those bet recommendations. So different markets we have in different continents, we operate different softwares and our own, but everything on top of that is 100% ours. And that's what's made it key. And, also you've got to have people in those countries understanding what the market is for those sports and understanding what they want to see, what they like to bet on. And, we found across the world that obviously football for us, soccer is a massive, massive sport, right? But also then you'll find all of a sudden that the NBA is right up there as well. And you wouldn't expect that in some of the markets, and also if you've got this global business, what's happening in Betway is when people are sleeping in one country, they're up in another country, and that's what it is. So you are literally open 24/7. And it sounds obvious, but it's actually not so obvious. You're 24/7 all the time, which also has its stresses because you've got so many markets open, your systems have to work and all the accounting and everything that comes to it and the regulations. So that's what we've learned to do, and that's what we keep developing and keep adding all this new product all the time. You know, it would be great if we could click our fingers and across the world in all regulated markets we had our software, but it's a journey to get there, and that's what these businesses are about.
All right. So the next question I want to get into, I think, is a very important one. I think it's when I look at gambling and different platforms, this is what I always come down to, and that's the customer acquisition strategy. You know, one of the things that I always look at is, you talked about it a little bit earlier, bonuses, right? I think that's really one of the focuses, and different companies have different strategies. Let's say, you know, some want to be around 20 years, some want to be worrying about making some money now.
Exactly.
So let us know, what is the attack here, and how do you go after it? I'm sure Eric was paying attention to this when he made his decision, but I'll let Neal definitely go after it.
So I think importantly, people have to understand the difference between gross gaming revenue and net gaming revenue. So gross gaming revenue is before bonus money. So what people are saying is, that's like doing sales because you're giving free offers, but then you're given so many free offers that by the time you come down to net gaming revenue, you haven't made any money. So I think that's an important, and that's been the bottom line of our business from day one. We understood that if you give too little bonus, it's no good. But if you give too much bonus, you're actually just changing the odds. And not only that, you could be coming into negative territory because they're using the bonus money against you. And it's all about, our business has been built about understanding the customers, understanding the value that each customer costs you in each market, and it might be very different, and then the lifetime value. And how we've done that is, we said that, okay, you can acquire well, but imagine you're acquiring well, they're coming into your ecosystem and your back door's open. So they're coming in, as quickly as they're coming in, they can be going out. So that means you're going to not make as much profit. So what you have to do is, you've got to acquire cleverly and make sure you're keeping them engaged in your environment and giving them a great service and giving them what they would like. And then what happens is that you can think you bring in all these customers, but yet they're just they're just taking your promos. It's no difference to walking in a store and saying, well, if I buy 3, I get 2 free. You know, eventually you still have to make a profit on the 3 less the 2 that you've given for free. And that's really it's as simple as that, but you have to understand the metrics that work within each of these markets. And you know, with online, you can get a lot of people coming in who can take advantage of you very quickly.
Definitely. I'd have to say, I mean, I'm not going to say I'm doing that, but all right. But definitely, I'd have to say there's something sticky here, because I'll just show this slide really quickly. We won't go too in depth on it, but definitely check out this slide, guys. 40% of Super Group's 2020 CAGR here, really coming from sticky customers acquired before 2019. This is what you kind of want to see. I think that's the mix there of that bonus, how much you're giving, how much you're really giving back to the customer. So let's go ahead and let's get into a really important section when we really start talking about kind of the benchmarking, right? And then that's what I want to get into now. Is let's take a look here, and I think this really stands out to me when you look at the 22 estimated revenue here at 2.6. This could have been a big reason why this deal was made. So I'll go to Eric here. How do you think that this kind of played into kind of your decision making here?
It was vital to the decision. We didn't, Neal's heard me say this, rattle these things off. You know, some things that are under our company's control or greater degree of control, and there's things that are outside it. So things that are outside it is, what are other companies worth? Those are benchmarks, but you know, things change. What is the overall stock market like? Is it healthy or is it not healthy? And then what's the enthusiasm for gaming stocks? And underlying all that, company performance. Okay, so then you back up and say, well, what can you have an effect on? The last one, that's it. Companies got to be able to perform and put points on the board. All the rest of it, you can, no pun intended, all joking aside, you can bet on what the market's going to be or what the multiple of the gaming industry is going to be, but you can't control it or affect it. You are part of it, but you can't control or affect it. So you can't rely on it. And so when we and Super Group and the Super Group advisor really sat down to negotiate a deal, of course each side was trying to get a little bit more of the pie. But what kept bringing us back together was this common question. When we announce where should it trade? Not where will it trade, where should it trade? And the answer to that has to be pretty close to the price we're transacting at, because otherwise you're deceiving yourself. If you're pricing it on the hopes that the market will give you double or triple the multiple, it might or might not happen. And so we looked at the benchmarks very carefully and over again, and then ultimately came to the conclusion that there is no perfect comparable. We're not like the US only companies, and we're not like some of the global companies that came out of the bricks and mortar. So there was an element of judgment which was pretty big, and we hope that we got it right. I've the strains, or I should say I've read them mostly in social media, and I know that there's some investors that are impatient for numbers and impatient for closing, and that all that stuff will come in due time. But the reality is, to us, was pick a company and a management team that is a good company, good business model, putting points on the board, high probability they're going to continue to put points on the board, and then you'll let the market do what markets do, which is go up and down and give you a report card. And so here we are with a report card.
Definitely. Now it's time to put it to the test. That's what it's all about. One thing I definitely mentioned is that, I mean, at the end of the day, even the pandemic really didn't slow us down. I mean, we still had championships in the NBA, NHL, NFL, MLB. If we could do it in the pandemic time and still have gambling going up, I can just imagine this year when we're really starting to get back, and just wait till next year. So I definitely am looking at the overall market as a basket that I've talked about this with Chris. The pie just keeps getting bigger, which state by state. So I think you guys are definitely going to be licking your chops over the next couple of years. So that's the last comment I have.
All right, perfect. Guys, if you don't mind, we have a couple questions here from the chat. We've talked some of these markets you're already in, but a couple questions out there. Up first, we've got HCP asking, with Canada recently announcing, sports betting coming there, is there plans to expand into Canada from Super Group here?
Of all these markets that are regulating or regulated, this is what Super Group is. We're in lots of these markets, so of course it's like no other market. It's no different to the US. It's when you've got a global business, you've got regulating and regulated markets, and you've got to adapt, and that's what this is about. This is the evolution of online gaming across the world. And in some cases it's taken 20 years to get here and 25 years, but that's why I'm saying this is the marathon, not the sprint. Some of these European countries have only regulated recently. So it's all of that. So we in all these markets, and we look at all of them, and that's why we've got so many people and trying to understand the opportunities in every single one of them.
Yeah. Hey, Chris, let me add that one of the really interesting things with Super Group is they sneak up on people. They sneak up on the industry. They sneak up on investment bankers who didn't know who they were until we announced. They're a big company that's very profitable. And as it relates to Canada, there's no specific for us we have not put out specifics, and we're not going to put out specifics. But really, the answer to your question is yes, we're in Canada. We disclosed, I shouldn't say we, I didn't do it. We're merging with this great company. They're in Canada. They're well known in Canada, and they're going to do just fine in Canada.
Perfect. And then another expansion question here from Keith. Horse racing. We've heard a lot about sports betting, online casino. What kind of operations does Super Group have in horse racing, and could that be another area of expansion here?
No, I mean, obviously offer horse racing. I think depending on which countries you're in, but horse racing, for example, in United Kingdom is really big. So it depends on each market, and it depends on the offerings that are required in those markets. So again, it's not just one sport, but we do all sports, like even esports. We do, as I mentioned, we do tennis, we do lots of stuff, and in-play tennis and lots of it. So we open for all these sports, and it's about what the customers want in each of those regions, and we have to be able to deliver them what they want and what sports they like to bet on.
Awesome. And then one last comment here. I saw in the chat from Dustin. Eric needs to go into politics. He's great at answering yes without answering yes. I thought that was the perfect comment here. Eric, what do you think? Is that the perfect comment?
Yeah. Hey, Dustin, thank you for that shout out. I've thought about that a number of times, and each time, politics for me would be service, and I have thought about it. And each time I come right up to it, and I go to talk to my wife, and she says that's fine if you also want a divorce. So here I am. I'm remaining in the private sector, but I hope, Dustin, you've got some friends who will go to in other areas of public service and serve the country as opposed to some crazy idea one side or another. Let's be in the middle and we'll come out fine. How about that?
Awesome. Well, that's going to do it for today's interview. So joining us again on the show, Eric Grubman, the chairman and CFO of Sports Entertainment Acquisition, and Neal Menashe, the CEO of Super Group Global. Companies announced a merger. That ticker is SEAH. Thank you both so much for joining us on SPAC Attack. We look forward to following the progress of this deal and hopefully seeing you guys soon.
Thank you. Thanks,
Chris, I'm coming for you on that split. We'll see you later.
There you guys have it. Another exclusive interview here on SPAC Attack coming to you guys. And this is what we do every single time, guys. So definitely smash the like. If you guys like the comments and chat questions, that's what we do it about. I mean, where else could you be doing this right now? You can't do this on that other media site that I won't bring up, but definitely this is what makes us different, guys. You guys are giving the chat questions. We had comments on our Twitter, so definitely stay with us, guys. You guys can always ask us questions on there. We pull from there all the time. And this isn't only about us, right? It's about just as much as you guys out there as it is for Chris and I to ask these questions. So give us a thumbs up, hit the share button, let everybody know this was a great interview. And Chris, what you think?
Yeah, shout out to Sean. I know he's here in the chat. A buddy of mine on Twitter, he was able to get me some questions. He's a big fan of this company. Mitch, I think that that comment from Dustin in the chat really stood out, right? It's funny, but it's also so relevant. We were able to ask some questions here that we didn't get answers to, or did we, right? So, to hear that expansion maybe into media, Neal talked a little bit about streaming and media and, replays, highlight videos. And, Eric saying without answering, that he had said they're an entertainment company, not a gaming company. I love that, right? That's what we want to see. We're seeing DraftKings dive into media, right? They're acquiring some companies, they're expanding. That's what sports betting is all about, right? Sports TV and sports betting, they're so connected. Just bring them together. And I think you're going to see that here. I love this interview. Exposure to so many countries, Mitch, and 10 states right now. You heard him say on Canada, they're going to be there.
One thing that I'm thinking about, Chris, is that, we've been in kind of this rough period, and we can be honest. There's been a rough period in kind of social kind of interaction. And I think there's no better way to bring people together than sports. I mean, if there's anything more fanatical that can bring people together, it is sports under one name. And that's what it's all about a lot of the times. And I think that's what people forget about a lot of the times about sports, that sports does bring. It brings this kind of togetherness feeling. And I think that's why people really attach themselves to sports teams, get that loyal fan base. You can go now you can go to your bar and you'll find, those 20 guys that are rooting for your same team. And those are really the moments that take you to the next level. And I think really when you're seeing this, we're just getting started state by state, getting towards big states. We talked about it yesterday, Chris. California is on the loose. I think when California gets going, I mean, you're talking about massive, massive revenue that's going to be coming to the gambling industry. And I mean, they're looking forward. They can put out TAMs. I mean, really, it has to be kind of this future look where you're not understanding really the amount of revenue that's coming in here. I think this is going to be bigger and bigger. We talked about that pie. It's time to eat, Chris.
Yeah, and since you said that, Mitch, California, that's an interesting note here because Super Group has deals in place already with some teams for sponsorships. One of those teams is the Clippers, right? Huge in California. One of those teams is the Nets, you know, so you have the New York, New Jersey market there. New York's going to be a huge
pointing
state.
something out here, Chris.
I mean, talk about putting you know, steps in place. You know, I feel like at this point, Neal and Eric, you know, they're playing chess. They're lining up that board. They're getting everything ready to go. I mean, I love this company. I own some call options on this. I'm going to go long. This is a great company for the future. I loved this interview, you know, and those two guys had fun, right? They had fun on the interview, the interaction. Shout out again to the chat guys for, you know, providing comments, for liking this video. That's what we're all about. You know, a great interview here, Mitch. I know we're running out of time. Tomorrow on the show.
Time to wrap up, but you got
Tomorrow on the show, we're going to talk SPAC warrants. We're going to have a warrant expert on the show. I know you guys have been dying to hear more about warrants, right? They're high risk, high reward, but right now warrants have been popping, so we're going to hear all about it. So stay tuned.
You guys hear
tomorrow.
it. Hey, warrant show tomorrow. Stay tuned. Share it with everybody. I know a lot of people want to learn about warrants, so stay tuned. Up next, Power Hour. You guys got it.